10.5 billion. That's the total number of website visits that Zillow Group attracted in 2020. Hello, I am Brandon Nesbit, a current high school senior based in South Lakes High School on the east coast of Virginia. Today, I will be pitching Zillow, which is the premier real estate digital platform. We're recommending a long position for this stock with a target price of $56.90 per share, which leaves an upside of 29.5% off the current price of $43.50. To give a brief company overview, Zillow is a larger conglomerate comprised of several smaller subsidiaries, including the famed Trulia, StreetEasy, Out East, and HopHads segments. Beyond that, Zillow also features other services under its brand name, such as Zillow Premier Agent, Zillow Home Loans, as well as Zillow Closing Services. Now, in general, Zillow is split into three primary segments. The Internet Media and Technology, also known as the IMT division, which includes the Premier Agent rental marketplace Zestimates. This second division includes the Mortgages segment, which is the Zillow Home Loans. And the Zillow Home Loans is primarily specialized in providing home financing for home buyers. Lastly, we have the Home segment, which includes Zillow Home Closing Services, which provides title and escrow services. This segment used to include Zillow Offers, which was the iBuying home flipping business that was shuttered in late 2021. When conducting a market analysis, we realized that there's a total addressable market of over 210 billion. And within this, Zillow has already captured a substantial portion because it has already amassed over 10.5 billion total visits, as well as accumulated a average annual monthly high of 245 million unique users. The platform also features over 140 million homes in the entire US. Now, beyond this incredibly growing total addressable market, there's additional opportunities for expansion, including an $807 billion opportunity involved in the home insurance, renovation, moving, and appraisal services. Now, addressing this point, Zillow targets various customer pain points that we believe serve as the basis of its competitive edge over other industry peers. For example, for home buyers and sellers, Zillow addresses the pain points of geographical restrictions, difficulty of identifying real estate agents, as well as challenges in mortgage financing with its multifunctional solution, including its database of over 140 million homes, its Premier Agent Network, which connects real estate agents with home buyers, as well as its Zillow Home Loans service of providing mortgage originations, as well as Zillow Closing Services. For renters, Zillow does a similar process in terms of addressing pain points of lack of accessibility and transparency with extensive rental listings. The company also streamlines the rental application process through its software. When analyzing the competition, we realized that Zillow really comes out ahead because, according to online estimates, Zillow accounts for over nearly 50% of all real estate related searches. In fact, if you look at the pie graph here, Zillow, which also owns Trulia, account for a combined 50% of this entire monthly visit pie chart. And we see that the second place, Realtor.com, is quite far away from that position. As we look over here on the graph, we notice that Realtor.com has only one half of the total monthly visits of Zillow, as well as a lower pages per visit than its other competitors. On this end, Zillow has an incredible advantage because it also has developed a proprietary technology called Zestimate, which is a property assessment calculator. In comparison to Redfin, this calculator is more accurate and has taken in consideration better details when examining the property values across the US. In terms of its competitive moat, we recognize that there are various barriers to entry for the real estate market because Zillow has invested incredible amount of resources to develop its proprietary technology as well as its software, which provides data on overall 140 million homes in the U.S. In fact, Zillow is more widely searched than real estate on the internet and attracted over 10.5 billion website views. Beyond that, Zillow is recounted as one of the most trustworthy and popular brands in the entire real estate market, including other companies, as we mentioned before, like Trulia. Lastly, Zillow really aims to provide a streamlined transaction experience, which includes facilitating the entire transaction from purchase all the way to closing, as you've seen. The Premier Agent is what allows customers to initially identify prospective homes, and closing services as well as home loans allow them to close on the deal. When examining the financials, we notice that Zillow has significant diversification because it's not only focused on advertising. Beyond advertising, the company is also focused on mortgage origination as well as closing services. As we've seen, this company has a robust source of liquidity. Its net cash had provided $4.5 billion. And then when we actually examine the source of cash, the use of cash in the financing activities, we realized that most of it was dedicated to either debt repayment or a substantial amount was dedicated to repurchase of shares, which reduces dilution and increases shareholder value. Upon doing a ratio analysis, we realized that the company Zillow has significant advantages over other competitive firms. As we've seen, Redfin, Opendoor, and OfferPad have significantly lower gross profit margins than Zillow, as well as lower current ratios. And as we see, Zillow is the lowest one in this group in terms of its debt to equity ratio, indicating minimal leverage. Valuation. For this valuation, we did a discounted cash flow analysis, and we estimated the intrinsic value per share to be around $56.90. We estimated the growth rate to be 25%, which we believe is reasonable given the explosive growth of the internet as well as the Zillow platform over the previous 5 years. Risk and mitigations. We believe this is one of the biggest key points in our analysis was the mitigation of risk throughout the real estate market. For most, as we've seen, rising interest rates have led to a crisis of sorts within the economy. However, Zillow counters this risk, one, by having derivatives that hedge exposure to changing interest rates, two, transitioning away from iBuying so the company is not saddled with billions of dollars worth of physical inventory, and three, the company's reliance on fixed rate debt. Beyond that, Zillow also has other mitigations against credit risk in terms of the mortgages that it originates. The company is very diversified. No single customer constituted 10% or more of its total accounts receivables. The company also holds its loans for a short period of time before they sell them to investors on the secondary market. And debt is not recourse to the entire Zillow group. In fact, the warehouse facilities and the repurchase agreements, which are used to fund Zillow home loans, have no recourse to Zillow Group. Lastly, the company's intellectual property is protected through its 102 patents as well as its 152 patent applications. The Zestimate, which is Zillow's premier application software estimator, is also patented. As we've seen, Zillow is actually a pioneer in the ESG space. For the environment, Zillow has developed various goals in terms of reaching carbon neutrality. And one of the things we've realized is that facing the rising energy costs, Zillow has significantly navigated this crisis by pivoting away from iBuying, so it won't be saddled with the associated utilities costs of maintaining physical inventory. Zillow also partners with other national organizations such as the National Fair Housing Alliance, Housing Connector, as well as other organizations to promote awareness as well as eliminate barriers to home ownership. Zillow has also applied its technology to improve social justice with its ZHVI metric to gauge equality of home ownership throughout the U.S. Zillow lastly provides various employer groups such as affinity networks and community groups in order to promote diversity. And lastly, Zillow is a champion in the pay transparency space as women comprise half of its workforce, and women, black men, and Latinx men make 99 cents per dollar of wages for men. So what are you waiting here? Let's reimagine the future. Let's reimagine now. Let's invest in Zillow. Thank you so much for your time.